New Year weekend. Today and tomorrow are the last 2 days of the quote-unquote Santa Claus rally. I know that most of our portfolios throughout the group were up and to the right and in the green. I hope yours was too. Thanks for jumping in today. If you like what you hear, please give me a thumbs up. It helps get the message out to the rest of the YouTube universe. If you want to hear more from us, hit the subscribe button, share with your friends and family. We sure would love to have you as part of our group, talking and listening to what we have to trade. We don't do a whole lot of technical analysis. We're not going to throw any charts up here. We are simply going to give you the positions that we have confidence in, and what we're trading, what we're buying, what we're investing in, and then we want you to do your own due diligence. Hopefully we point you in the right direction, and let's get going. Before I do jump into it, I do need to tell you that I'm not a financial advisor, and nothing that I say here is financial advice. It's for education and entertainment purposes only. Consult with a financial advisor if you want to, but I say do your own due diligence. There's not a whole lot out there you can't do on your own, and make your own decision. Do your homework before jumping into any investment, whether it's a stock, whether it's an ETF, whether it's the bond market, whether it's cryptocurrency, you name it, do your homework. Okay, so let's jump into the best ETFs. I'm going to give you 4 of them that we feel are the best ones to have in your portfolio over the course of 2022. We feel they'll perform strong and outperform the market in 2022 and beyond. And I'm going to give you the names of these ETFs and give you some reasons why. But what is an ETF? So I've had people come to me and say, Tom, listen, I'm not very good at picking stocks. I like to pick stocks, but I tend to pick losers. And my response is 2 things. Number 1 is you're not picking losers. They just haven't won yet. So remember, you don't lose until you sell. But number 2 is if you want some stability in a particular segment, for example, if you're trying to pick an EV stock, and you don't pick Tesla, or you don't pick Lucid, or you don't pick one of these stocks, XPeng or Lee, NEO, you're going after a gamble stock and in one that's not proven yet. You might fail on it, but you got to hold on to it, because over time, if these stocks hang around, they will be worth more tomorrow than they are today. And tomorrow just might be 10 to 20 years from now. But, I always recommend getting some of your money into an ETF. What's an ETF? An ETF is an exchange traded fund, which means it's a basket of stocks or a basket of equities in any particular exchange. Could be in the SP 500, could be in the Russell 1000, could be in the NASDAQ, you name it. And then it could also be within sectors of those exchanges. So you could have a financial ETF, you could have a energy ETF, you could have a technology ETF, any sector you have out there, healthcare ETF, all the way down the board. I'm going to give you 4. I'm going to give you some that are kind of risky and some that are less risky. You decide which ones you want. Let me know in the comments if you are in ETFs and what experience you've had with them, and what your recommendations are. Okay, so the first ETF that I want to take a look at and want to share with you today is the SPVU, which is the Invesco S&P 500. And the reason I like this one is a low volatility. Low volatility means it doesn't have the ups and downs of some of the higher ones I'm going to talk about. So it's a low volatility ETF, and it's been around for quite some time. It does have a yield of 2.3%, so they're going to pay us a little bit to own it. It covers 11 sectors of the S&P 500, and 30% of its weight is in the financial sector. I do believe that in 2022, with the rate hikes and interest rates going up and inflation going up, that the financials will do very well. The SPVU has 30% of its weight in financials. And like I said, it's a low volatility index, so you're not going to get the super high highs, but you're not going to get the super low lows. Since October 2015, it's given us a 12% average annual return. The past year, it's up 33%, and the past 5 years, it's up 49%. SPVU, do your homework about it and let me know what you think about it. Okay, the next ETF of the 4, and the reason I put 4 here is often I have traders or investors come to me with round dollar figures, $1,000, $10,000, and say, okay, where should I put $10,000? I want to put it into an ETF. Let's do 4 times 25% and get some diversification and see if we can't beat the market. So the next one is the FAS, Dirección Financial Triple Leverage Stock. Now, triple leverage ETF. Triple leverage ETFs mean they give you 3 times the exposure that a normal ETF gives you. So, for example, if it's a financial ETF, which the FAS is, and the bank that they're looking at is Goldman Sachs, if Goldman Sachs goes up $1, you'll make $3. If Goldman Sachs goes down $1, you lose $3. So take the sector, take the basket of financial stocks, put them all together. As they increase by percentage, if that sector increases 1%, triple leverage will pay you 3 times. If it goes down 1%, you're going to lose 3% of your money, or 3% of your money will be hijacked for a while until it bounces back. Okay, the FAS, it tracks the financials under the Russell 1000 and the largest banks in the world, in the U.S. economy. And it gives you exposure to other large cap financials. So it does not offer a yield, and it does have high volatility, which means there will be high highs and low lows. But over time, I'm going to show you the FAS has done well. Just looking at a 1 year, this past year, 2021, it's up 116%, 116%. If you bought into it for 100,000 last January and you kept the 100K in there the whole time, then you would have made $116,000. Over the past 5 years, the FAS is up 27% overall, and then over a 10-year average is 38%. Now remember, last year was 116%, but having a 10-year average of 38%, not too bad. That means for every 100,000 that you have in it, you made $38,000 on your money. So definitely beat the S&P 500, which in my opinion beats the market. If you want something a little less risky that doesn't have that triple leverage feature, take a look at the XLF. It's a low volatility ETF. Basically has the same banks and financials in it as the FAS. It just doesn't have the triple leverage. Okay, let's move on. Let's take a look at the SOXL. SOXL is a semiconductor triple leverage as well. It's also triple leverage. Why do I like the semiconductors? Again, my opinion only is I know we've been in a shortage for semiconductors. The shortage won't last forever. Will last another year or 2 years. Could be. I've got about another 18 months. I think that by July of 2023, we should be out of the shortage. We should be back to normal. But the normal will be a lot higher than what it is right now because of all the technology. See, we have a supply-demand problem. And the problem is not with the demand, it's with the supply. That is one of the best gifts that the market has given to us in 2020 and 2021 is the semiconductor shortage. So I personally like to be in the SOXL with both hands and continue to buy. Now, SOXL trades around $72, so it's a very affordable ETF to get into. Over the past year, it's up 118%. Over the past 5 years, up 78%. And the past 10 years, 66%. 10 years, I love to look at these funds over 10 years. 10 years ago, put 100,000 into the SOXL and you would have 166,000. Put 10,000 in the SOXL and you would have your 10,000 plus another $6,600. So great investment in my opinion. All right, the last ETF to round off our diversification right here is going to be the UTSL, which is a utility sector, triple leverage as well. Oh, before I get into the utilities, if you wanted something that has less risk and low volatility, check out the SOXX. Again, it does, they're not exact, but it does mirror the SOXL. It just doesn't give you that triple leverage benefit. That's SOXX for a low volatility semiconductor ETF. Okay, so the UTSL, what is the UTSL? It is a utility triple leverage, meaning giving you 3 times exposure to the energy sector. The last year, the UTSL is up 47%. The past 3 years, because it's only been around since I think May 3rd, May 3rd, 2017. So the past 3 years, it's up 17%. And if you take all 3 of those years and you put an average together, you're looking at a 13.21%. It's going to cover all the utilities. And so there you have it. you have a utility ETF, you have a semiconductor ETF, you have a financial ETF, and then you have a very, very conservative low volatility in the SPVU. Again, to digress, I'm going back to the UTSL. If you want something in energy that has low volatility, check out the XLE. And guys, those are the four sectors or ETFs that I believe have a lot of runway in 2022. I mean, take a look at it. We've got financials, we've got energy, we have semiconductors. What more could you need? I hope everyone's having a great day. I hope your portfolios are green. I hope that you make the investment in yourself and the investment in your family, and you build wealth. Let your money work for you. When you go to bed at night, money should be working for you. When you wake up in the morning, it should still be working for you. On the weekends, let your money work for you. Become invested. If you're not invested, check out the links down below. I've got 2 platforms that allow you to trade fractional shares. I also have 2 platforms for cryptocurrency. I've got, crypto.com, giving away some free Bitcoin, and then also Coinbase, which is giving away free Bitcoin. But if you don't have a trading platform, I do recommend TD Ameritrade. That's where the head TMP account is, and the sub TMP accounts are. That's where my personal private investment account is. But then I have some trading accounts. I do trade on Robinhood and I do trade on Webull. And a lot of times it's because I like to keep my options trades separate than my investments so I can watch my money grow and I'm not borrowing from my investment, my wealth chain that I'm trying to build. If you don't have a wealth chain, start one today. If you have one, add on to it. Your family's future depends on it. Again, if you've made it to the end of this video, God bless you. Hope that you gave me a thumbs up, leave me a comment, subscribe. I'm not asking for any money. All this is free. It does just help the YouTube channel get out to others. Thanks for stopping in, and I hope to see you on the next video.